for any person who wants to value real estate must understand the economic activity. That's one. Please keep that in mind because I'll take the second point now. The second point is another dictum that I have always believed in, and that's this. Usually your places of residence don't move. Once you live somewhere, you live in that place. But other things keep moving, your places of entertainment will either come close or they may go elsewhere. Your place of work may change from time to time. So these are the things which are actual economic drivers, or they are factors that influence your daily life, your earning capacity, your spending capacity as well. So residences are usually fixed, and other things, they are more or less in an orbit, metaphorically speaking. That's the second thing. And the first thing is identifying growth drivers. Now, from the point of view of somebody who's looking to understand the economic value in real estate, how does he or she put these two things together? Understand the growth engines and understand the orbit in which their daily life moves from time to time. Any preliminary thoughts on that, and then we can take them further.
Just before going to that, I think I'll just touch upon the points others also had expressed. An interesting fact actually is in 2013, roughly about $144 billion was invested into commercial real estate across the world. That means this is especially from investors, private investors, which is very surprising. That means all your investment managers are getting something right as far as real estate is considered across the world, which has been actually a spike since 2007 when it reached the highest at around $187 billion. This trend is also reflecting in India, actually. In India, from 11 to 13, about $4 billion worth of real estate transactions happened with private parties, whereas FDI was only about $2.1 billion, which means that there's a very, very healthy market as far as private investors are considered for real estate. And when someone is making such quantum of transactions, I believe that they're well informed in terms of what the economic drivers of the investing locations they're looking into is there. So they are analyzing, taking the necessary due diligences that are required for that. Of course, from 2008, when the global financial crisis happened, a lot of impact had happened in terms of the investments that they had made into real estate. There has been a very cautious approach. And people have essentially moved away from derivatives of real estate, and they're going back to brick and mortar real estate. So essentially, they are no longer interested in just buying, or I will not say interested, but I will say they are going slow on probably investing into commercially backed mortgages, or we are talking about NCDs or OCDs, but they're going and actually investing into physical real estate. Again, touching upon the point my other panelists said was that, you were talking about the idea of how to make a decision, how people invest. See, largely today, if you take any high net worth investor, okay, we are talking about that because a large segment of real estate today in India is only addressed to this segment. Let us be very honest. Every property in any metropolitan city which is above 1.5 crores plus is addressed to this segment. Because 80% of the population cannot afford anything beyond 60 lakhs. So in this forum, when we are talking of a relevance of a property about 1.5 crores, we can very easily put people into two categories. One, the first category is people who are looking to earn cash flows with low risk potential, which is essentially what commercial properties present, and I think that is where a lot of interest in commercial real estate is driven. The other one is actually people who are looking into value addition real estate, where turnaround they can do and then later exit at a better returns. Essentially what we're talking is they're investing into actual projects directly. It is no longer that they are shying away. I'm quite sure my fellow panelists will also agree that a lot of high net worth individuals are today directly investing with developers together to develop projects. So this is happening. Coming to economic drivers, I believe largely economic drivers make sense to the bottom segment of the buyers, especially residential, because we are all driven by the value perception of our residential buy. So, I mean, it's a common factor in Bombay. People travel from Vasai, Thane, Kalyan, and even, God forbid, Ambernath every day to work in the city. So, it is not really true if we say that something moves because your residential place of residence dictates where yes, support functionalities. Suppose, let's say, institutions, schools, and other support commercial activities like banks, yes, they do move, and that generates a significant amount of demand in certain locations. But largely, the livelihood is again, it's a very complex factor. It's a complex ecosystem. I mean, it's too naive to break it down and say that, it's just one factor which will dictate how most of these real estate components work together. Because the economic drivers themselves are very complex. The other thing is, what I was talking, also want to talk about technology, because it's very relevant as far as real estate today is considered. I mean, you walk into any 1.5 crore plus kind of a housing unit, you can see a plethora of technological, installations, right from, say, centrally remote controlled lighting systems, music systems, to, building management systems, to a lot of things. Yes, they are being incorporated. But I think where the high net worth individual separates himself from the normal buyer in terms of where he looks at technological innovation is not essentially in terms of what he's getting, but he's looking at what is the value that will derive, that technological installation will derive to his property. For example, in China, there is a new building, which is a 66-tower building, 66-story tower. This building is called a zero energy consumption building, which means, of course, we know platinum certification in LEEDs and a lot of other things, but it's zero energy consumption, which means that technically all the power, whatever heating, HVAC requirements, everything is generated within that building. They don't need any municipal services support. So, when such kind of buildings come, I think that's when a lot of high net worth individuals get excited into investing, because even I'm quite sure, all the entire gathering would agree, one of the top investment sectors for any high net worth individual is technology. When they're making allocations into things, they invest into technology. I mean, people have made money in technology and they're reinvesting back into technology. It's as simple as that. So these kind of things really, push the envelope, and that's where they see a value creation. And that kind of value creation is what typically drives investment for high net worth individuals. Apart from just saying that, okay, I'm going to buy a house for my family. Of course, the rudimentary requirements for a family also is an important part of their planning. But I think in terms of the return-based investments, this is where their investment philosophy lies.
And if I may add to something which Ajay Sharma was mentioning, I was actually talking about where the pulse of the market, where are the trends for HNI clients. So if you talk about high net worth individual clients, they typically invest for two prime reasons. One is that real estate is about passion to them, okay? And the second is they're looking for inflation-adjusted real return. These are the two prime drivers. It's not about asset allocation they're looking into this. So it's about passion and the real inflation-adjusted return. Till about 2008, before this global financial crisis happened, they become more passionate because they were getting fancy return from real estate and that practically from residential. But after 2008, they saw their returns getting tepid, it's getting slowed down, projects were getting delayed, they were not getting possessions, and the returns actually got tapered. So what they really realized that in post-2008, they're not very keen on plain vanilla residential product, okay? In place of investing directly into real estate, they started lending to realtors. So that is a trend we have realized. So directly lending to realtors could be through NCD, could be through pool investments, or maybe directly taking participation into projects like Ajay mentioned. Okay. Another interesting trend we are seeing, after 2008, the residential market in India continued to move upward. Okay. If you look at last 5 years, probably in Mumbai, the average return could be 70, 75, 80% on a residential project on an average. Okay. If you talk about Delhi, it could be 60, 65%. If you talk about Calcutta, could be 60, 50%. So residential was still giving positive return. But if you look at commercial market, it has still not seen that highs of 2008. Overall commercial market is still up, down about 15, 20%. Capital values are still down. Okay? But we have seen a very interesting trend in last probably 2 years, in 2011-13, like Ajay mentioned, rental yields have started to move upward. Okay? So probably India is the country which is giving highest yield in the commercial properties across world. Okay? One can easily fetch about 10% returns, plus there is a potential for capital appreciation also. So if somebody is looking at return, regular return, or maybe cash flow, so residentials give you about 2-3% cash flow versus commercial is giving about 10-11% kind of regular cash flow. Plus there is a huge potential for capital appreciation. Now what has emerged post this about May government formation, a lot of positive movement or development has started to happen. Lot of economic activity has started to move in. Lot of announcement has started to happen. A lot of global investors are again looking back to India. I think FDI was opened in India in 2005. Okay, it peaked in 2008 with 3.3 billion odd dollar, okay, USD, and it again declined in 2013 to about 1.1 billion dollar. Okay. Now again, but after this economic stability, government formation, now policy paralysis is coming to end. A lot of, again, foreign investors are coming back to India. They are looking at an opportunity to come back to India. So HNIs are smart investors, okay? Selectively, like I said, they are already looking at directly lending to realtors. They are also looking at commercial properties selectively, and they are capturing that. So they get about 10-11% rental yields on them, and then plus there is a opportunity to make capital gain on that. So these are the two emerging trends we have seen in last couple of quarters.
So hold on to that thought, please, because you've pointed in two important directions where I will like to have some more view from you, and then go to Vivek as well. The first thing that you've highlighted is the way capital appreciation has taken place in different asset classes, residential, commercial, etc. And you've also highlighted within that there is a yield expansion that's taken place, while the capital appreciation, the fundamental value hasn't really gone up of the asset. Now that to me gives a very important indication. I actually take a lot of queries on several TV channels fairly regularly, and these are the questions that I usually encounter. I want your thought on one. Why is it that the capital value isn't moving and the rental value goes up, which is why the yield expansion is taking place? To me, it appears that it is probably because the faith or the trust in the fundamental value of real estate may not be very high, but the occupancy demand is certainly there, and probably it's going up. Is that one of the things? And I want you to expand a little bit on that. And the second point that you have touched upon, is a little fuzzy, but I think you pointed at the regulatory environment, the way it had behaved. You spoke of FDI being open, and then the policy paralysis step coming in, and now things looking like easing out a bit. So any further thoughts on, particularly in the first point, as to why is it that despite the occupancy demand remaining high, the inherent value of real estate hasn't really gone up, and that could be an important factor in understanding how to decode the value proposition. Any preliminary thoughts on that, and probably you could give your take on the regulatory front as well.
See, if you take overall commercial market or office space across India, I think till date about 80-82% occupancy is there in the grade A buildings. Okay, so we are still about 18% vacancy level are still there. Okay, so this is one reason why probably capital values have not moved up that much. Okay, and economic activity was not there. There was not much of the taker were there. Like if you talk about in 2009-10, 46% of the total available space in office was occupied by IT. Okay, and it has come down to 34%. Okay, because if you look at all companies, technology company, TCS, SCL Technology, they were not hiring people. because Europe was down, USA was down. But if you look at last 1 year, all of you are related to stock market. You must have seen technology is the sector which has outperformed. So why it has outperformed? Probably the US market has started to recover. Europe is about to recover. There's stability in the Indian market. So all these technology-related companies are about to go for the expansion plan again. Okay. Technology companies.
If I were to just interrupt you, they are definitely on a high, but they are probably not going to buy ever. They're going to occupy, use it, but without buying, right?
No, very interesting trend is happening. A lot of MNCs are coming now, and now they are directly purchasing in place of going for leasing arrangement. We have seen a very interesting trend in that. Because what is happening, if you look at US companies, if they take back whatever earnings are there in India, if they take back to USA, they are supposed to pay taxes on that. Okay. So if they deploy that money back in India, they're not supposed to pay any taxes on that. So whatever cash flow they are generating, in place of paying 10, 11% rents to somebody, they're trying to invest that money into.
Fair point. I think you've made your point quite clearly.
I'll
Just a very
add,
quick
yeah.
take on the regulatory environment and how it should be translated into imparting a learning or education for the professionals in that sector. I think we will do that, and then we'll
Yeah.
go out to the audience to have a quick take.
Just taking on, as far as the rentals are concerned, obviously, it was like lack of confidence because of policy paralysis in the last couple of years, which possibly saw, rentals continuously increasing without the real estate actually buys happening in the commercial sector. The other thing is, in the cities, you'll have to again, between the cities, you'll have to differentiate. Delhi would be typically a city with a lot of land parcels which is being unlocked. Bombay, typically, again, this is an area, this is a patch where we are sitting. Will keep on behaving differently from the rest of the world and rest of India. Sure. But here again, you have a lot of, parcels which are being made available.
Right.
Then again, you have, because of which and plus, you have a lot of projects which are into different phases of construction for the last many years. So many years, and obviously you're not seeing occupancy happening, construction still ongoing. So where is it that the rates are headed? Moderate at the moment.
Sure.
And possibly, with so many projects which are getting constructed and getting occupied in the next couple of years,
Sure.
possibly there is a upside which is going to happen in this part of the city. Look at the other part of Bombay. You have the suburbs, you have a DMAIC, which is the metro project,
Yeah.
which is coming in.
Yeah.
Now, what if, somebody I think mentioned Ambernath, what if Ambernath falls into a metro and reaching an Ambernath is actually 20 minutes, vis-a-vis reaching a Andheri, which is bloody God forsaken 1.5 hours.
Right.
Today, it might be, Ambernath might be sitting at 3,100, 3,500 rupees, and Andheri is still sitting at 18,000 rupees.
So it's a function of,
Absolutely.
the proximity and the infrastructure
So
feeders. that
times
you
are
get.
exciting. Times are exciting, with
Obviously.
infrastructure coming up
Right.
overall.
Right.
It's just Bombay per se, not only Bombay, I think it's across the country.
So it is the lifeblood, and
Absolutely.
we all agree on that. What I want to do at this stage, we are actually absolutely out of time. Maybe in a couple of minutes, if there are any questions or any views from the audience, we can take just a couple of them, and then we can probably close it. There's a gentleman there. Please go ahead, sir.
Hello. Basically, we are the advisors. We advise our clients to invest in share market or mutual funds or real estate or gold. So, investing in real estate is one of the options we have to invest in. In current situation, whether you feel that these prices of real estates are reasonable and we are going to get an appreciation in near future in real estate. I'm talking mainly about Bombay. And the second question is, do you expect like a subprime crisis in India?
Do you want any specific panelist to answer that for you?
Anybody can answer.
Okay. Anybody willing to take that? Okay. Paresh.
Yeah. As far as the view on the real estate prices in Mumbai is concerned, well, it will depend upon, currently we are seeing there is a situation of oversupply in most of the Mumbai market. So the general view is that we are not expecting prices to go up substantially in the immediate future. Now, having said that, yes, there could be some pockets which you can identify. Like I said, now investing in real estate is very similar to investing in stock market. We may not be in a bull run, but we can identify specific opportunities, specific locations. So what appears is that the eastern side of the city, the western side part of the city is already developed. I'm talking about the suburbs. The eastern part of the city, areas like Chembur, Vadala, where there is a lot of development taking place, there is a lot of connectivity initiatives being taken place, are underway. So we feel that, the eastern part will develop more than western part, and you could still identify some good investment opportunities in that location. As far as the western suburbs are concerned, there is a huge oversupply situation, so we don't see much appreciation taking place over there. Same is the case with, south and central Mumbai, where we are talking about Worli, Prabhadevi, Parel. There is a lot of oversupply situation, so we may not see much appreciation over there. We will see appreciation taking place in the outskirts of Mumbai, in the MMR region, typically places beyond, let's say, Virar, like things like Palghar, which may fall in the path of the Delhi-Mumbai industrial corridor. So maybe those are the locations where we'll see good price appreciation. Places like Badlapur, Ambernath, etc., which are good affordable housing destinations. So these are some of the areas in which we can see good price appreciation.
Just adding to what Paresh was saying,
Probably
I
we
think
need to just close it quickly. So one
I
final
think-
thought.
Sir, I was having another question of subprime crisis in India. The way the prices are rising and the way the black money is involved in that, and the way all politicians are involved in this real estate business, I feel there is more likely of a subprime crisis problem in India.
Can I try and answer that for him? No, that's a good point and a good apprehension. This is not
Sir, let me interrupt you once again,
Sure.
because yesterday there was same conference like this, and Rajdeep Sardesai has clearly stated in that conference how all politicians are involved, of all political parties, in this real estate business.
It's true, but real estate is not the only business where politicians and others are involved. There are certain other businesses as well. So if that will be the only reason why we think there will be a subprime crisis, I don't think that is entirely true. Of course, you could have a view because of certain other financial reasons, certain other economic reasons. My personal opinion, again, is pretty clear. We are probably not headed into a subprime crisis. A subprime crisis happened because of various factors which are practically not applicable right now, particularly the banking system, the financing system is more robust than why the subprime crisis took place. So probably this is a very open, very large subject. We could dwell into this a little more. I think they are ready to ask us to get out of this place. So we'll definitely interact separately. By the way, thank you very much for your patient hearing, and thank you all the panelists. It was great to have you. Thank you.
So be seated, please. Thank you so much to all our panelists for giving us the insight. I'm sure this would help the audience. Because as we are doing since morning, so panelists are asking questions from the audience, and they're coming on the stage to, present the memento. But because I guess that person has asked a lot of questions, so maybe he can be one of the person to present the memento. Yeah, so can I please request? Yeah. But the rest of the questions has to be put by you, sir. So because we need 4 more. You can give it to anyone. So maybe small questions and my audience can answer it precisely. I want panels. Yeah.
All private wealth managers are here. I think everyone are watching REITs with a lot of interest. So what's your opinion about it, and how you're going to include it into your portfolio, or advise on the portfolio for your clients? As far as I think that taxation clarity is required only for the foreign investors into India, but not, I think, for domestic investors. I think that's pretty much quite clear on what under what sections will be taxed under different sections.
maybe you can come up. Because there's a competition only. You can come on this side. Thank you so much. Thank you so much. So your turn.
Yeah, we are all wealth managers over here and we all talk about allocation to real estate. You know, I mean, allocate portfolio allocation. So I would like to ask you, what do you think is the right location to real estate? What should be the right location to real estate in an investor's portfolio?
Yes, please, Mike, please.
I believe it should be around 2% because liquidity and efficiency is because of liquidity. And maybe if you are planning something about, if you are planning and let's say when it's a goal-oriented thing and at the time, let's say after 15 years, somebody needs money. And after 15 years, let's say there is a problem in like 2008, there is a huge liquidity problem. And if it is invested in other asset class, it is better to that's why I would allocate around 15%.
So, Yasir? Please come.
As for wealth, see, 15% may be excluding your primary property. You know, we are talking about excluding your primary from an investment of view. 50%, 20%. But typically in India, it has been even 35% and upwards. So that needs to be corrected. You know, if
I would tend to agree with what he's saying. 15% probably might be little good. Not just in India, by the way, it could be anywhere. Of the total assets that you will hold at any point in time, real estate, despite its liquidity issues and despite transparency issues, is probably a much higher rate asset. So I would tend to think more like 25 or
It may actually depend on the life cycle of that particular client. You have to see that also. So if somebody in the older stage, you can also hold 15%. If somebody in the younger age, you can hold on 40%, 50% also. So we have to there see in that perspective.
Please come. Irrespective.
I asked, I briefed about the FDI investment at the peak. Somebody could remember what was that amount? FDI investment at the peak at 2008. It was actually 3 billion. So
Somebody said 3.2. Who's the one?
somebody mentioned it 2.4, I think.
Yeah, please come. Thank you so much.
Since I happen to be a developer, we happen to be developers. Just any guesses on what would be the cost of construction per square feet for a 50-story building? Mami, you don't have anything which is 50-story plus anywhere across India. Excluding land, only cost of construction. Any other guesses?
Sir, which one is the closest?
I guess 8,000 is closest to it. It works out to 5,800 rupees, actually.
Okay. Thank you once again to all our panelists. Thank you once again. Thank you so much.